Good evening, students. Welcome to New Page Degree College, Champapet. Now, I am going to explain about BBA third semester, subject to financial management. Right? Before discussing these important questions and problems, first of all, discussing about the question paper pattern. So, let's see the question paper pattern. So, question paper contains divided in two parts. Part A and part B. Right? Part A given the 8 questions. So, out of 8 questions, you must be attempt the 5 questions. Right? 5 questions, each question carries 4 marks, 5 into 4, 20 marks. Right? Next, then part B. Right? Part B contains given the 5 questions. Right? 5 questions are the alternative questions will be given. So each unit given the two questions. So you must attempt the each unit one question. So 5 questions, each question carries 12 marks. 5 into 12, 60 marks. Total marks 80 marks. Right? This is the question paper pattern. Right? Then now we will going to discussing about the important question and problems unit wise. Right? Let's go into first unit. So first unit related to total theory questions. Okay? So first question is define financial management and explain its nature, scope and importance. This is most important. So what is the financial management? Financial management refers to the process of the any institutions, markets and instruments transferring the funds between individuals and companies and any organizations. So here the financial management function process of the planning, organizing, analyzing and control of the business activities and utilize the funds effectively is called financial management. Right? Scope. Okay, you can write the scope and importance like that. Investments decisions and financial decisions, dividend policy decisions and financial planning and forecasting. Right? What's the importance? To write the subheadings help to decision making, helps to business activities and reducing the cost structures and financial planning and forecasting and helpful to the okay. Next one. Next question, discuss the objectives of financial management. So this question is also asked like this. Explain the goals of the financial management and also discuss the objectives of the financial management and the profit maximization versus wealth maximization. So here financial management main objectives 3 types. Right? First one is primary goals. Second one is secondary goals. Third one is other goals. Right? Primary goals means related to wealth maximization. Wealth maximization means related to shareholders, like owner of the organizations, increasing the share capital, increasing the price of per share, okay, increasing the wealth in long period of time is called primary goals. Primary goals means wealth maximization. Next one is secondary goals related to profit maximization. You know, profit maximization, without profit, any business organization cannot survive. So, profit is most important in surviving the market and increase the and expansion the and grow the business activities. So here profit is most important. So profit maximization. Other goals mean financial planning and forecasting and working capital requirements. Okay, like that. Next one is third question. Explain the functions of financial and organization of financial function. So this is also most important. Okay, previously frequently asked this question. So here financial management functions are three types. First one is investment functions. Second one is financial function. Third one is dividend policy function. Dividend policy functions. So you read the about the investment functions is also divided two types: capital budgeting and structure of capital, right? And also explain the write the financial about the financial function and also dividend policy function, right? These three questions most important. The three questions frequently asked in previous exams, and also one question are there. Describe the major financial decisions and investment financial and dividend decisions. This is also important. So in first unit, 4 questions will be there. Okay, 1, 2, 3, and 4 questions. Next, now let's going to second unit, right? Second unit, first question is explain the concepts of the time value of money and its importance. So time value of money is most important nowadays and also in business concerns. So current money is more effective in future, right? So the money value changes day to day and present money changes into in future. So time value of money concept is most important in any business concerns, right? So what is the importance of the time value of money? So time value of money helpful to the in decision making. Time value of money in helpful to the raw material purchases and continuing the business transactions and capital budgeting and financial planning and financial forecastings and any of their. So here time value of money is most important factor in all business concerns. So this is most important, compulsory as per the exams, right? Second question is what is compounding and discounting. What is compounding techniques and discounting techniques? Explain with examples, right? This is also most important. So here in second unit, okay, given two questions. One question will be theory question and another question will be problem, right? Then we will discuss about problems related to second unit, right? In second unit, you must read the first question, explain the concept of time value of money and its importance in finance. So every year giving in frequently giving this question in previous question papers. So you must read this question, okay? Once explain the concept of time value of money and its importance in finance, right? Then alternative question related to problem, right? So here time value of money, techniques of time value of money divided in two types, right? Present value and future value. Techniques of time value of money divided in two types, present value and future value, right? Present value is also known that discounting techniques, discounting techniques, okay? Next, future value is also known that compounding techniques, compounding techniques. So in previous question paper, so ask related the two methods, okay, about present value related question problem and future value related problem, okay? We will take a small example, okay? Here mention the two examples related to one problem is related to present value and another problem related to future value, right? So first problem, see the first problem, calculate future value of 20,000, calculate future value of 20,000 invested for a period of 5 years at interest rate 8%, right? So present we have to invest at 20,000 rupees. So 20,000 rupees invested in a specific sources. So what will be we getting in future? 10,000 rupees. So you have to find out the present value of money. Right? Given here future money, future value of money. Now calculate the find out the present value of money. Right? Here using this formula, V0 is equal Vn divided by 1 plus R to the power of n. Right? Observe this. V0 is equal present value, Vn is equal future value, and n is equal number of years. How many years here? 8 years. Right? R is equal 10%. Okay? 10% is also write like this 0.10. Okay, if you here given the 15% like 0.15. If you given 12%, here 0.12. Right? So this value is applicable in this formula. V0 is equal to Vn. Vn means future value. Already given here 10,000 rupees. 10,000 rupees divided by 1 plus R is equal 0. Okay, 0.10. 0.10 means 10%. 10% means 0.10 to the power of 8 years. Right? V0 is equal 10,000 divided by 1.10 to the power of 8. Right? Calculate the 1.10 into 1.10 into 1.10 into 1.10 into 1.10 into 1.10 into 1, 2, 3, 4, 5, 6, 1.10 into 1.10 is equal to 2.1425. 2.1425. Then V0 is equal 10,000 divided by 2.1425 is equal to 4,665. 4,665. So once observe this, future after 80 years we will get 10,000 rupees. So here future value 10,000 rupees, we have to find out the present value of money. The present value of money is equal 4,665. So 4,665 invested in any sources after 80 years, 8 years, we will get the 10,000 rupees. So this is two models about the time value of money. One question, one problem related to future value of money. Another question related to present value of money. Right? Two questions. Right? Next. Sometimes this type of question is also given in exam. Okay, NPV. NPV means net present value. Net present value. Right? So let's take an as one example problem. Right? you are going to listen carefully, ma. You are going to invest 3,000 rupees end of first year, end of first year, and 4,000 rupees end of second year, then 6,000 rupees each year, 6,000 rupees each year from third to fifth year, third to fifth year. Find out the present value. Find out the present value. These cash flows at a discount rate 10%. Discount rate 10%. This is also most important. Okay, previously many times frequently given this question in exam. So listen carefully. You are going to invest. How much invested? 3,000 rupees end of the first year. So second year invested 4,000 and third year then 6,000 rupees each year from third to fifth year. First year invested 3,000 rupees, second year invested 4,000 rupees, then third year, fifth year and sixth year invested 6,000, 6,000 and 6,000. Right, find out the present value. This cash flows at the discount rate is 10%. So here continuously each year invested in the business. So we have to find out the net present value, right? Listen carefully, ma. Here mention the years 1, 2, 3, 4, 5 years. Here future values. Future values are cash flows. So first year 3,000, second year 4,000, third year 6,000, fourth year also 6,000, fifth year 6,000. Right? Then rate of interest. Rate of interest. Here what's the rate of interest? 10%. 10% is also rate is 0.10 rate. Rate is 0.10. Here 0.10, 0.10, 0.10. Next, take the PV factors. PV factors 1 plus r to the power of 1 by 1 plus r to the power of n. 1 by 1 plus r to the power of n. Okay, remember this. PV factor is 1 by 1 plus r to the power of n. Actually here PV factors table, present value table and future value tables. So here not there. So without any PV factor tables, we have to find out the present values. Okay, using the calculator. So observe this. What is the formula here? 1 by 1 plus r to the power of n. R is equal interest rate. So 1 by 1 plus 0.10 is equal 1 by 1.10. Okay, calculate this. 1 by 1.10 is equal 0.9090. PV factor is equal 0.9090. Then press the is equal button. Right? Then okay, display the second PV value 0.826. 0.8264. Then press the is equal button again. So 0.7513. 0.7513. Again press the is equal button. 0.6830. 0.6830. Then press the is equal button. 0.6209. 0.6209. Right? So here getting the present values. Present values. So future values multiplied in PV factor. 3000 into 0.9090 is equal to 2727. 4000 into 0.8264 is equal to 3305.6. 6000 into 0.7513 is equal to 4507.8. 6000 into 0.6830 is equal to 4098. 6000 into 0.6209 is equal to 3725. Okay, this is the present values. So first year, second year, third year, fourth year and fifth year. So here using this format, so here cannot given the same future values. Here given the 3000, here given the 4000, here 6000 and 6000 and 6000. So this is the most important. So in second unit, right, three methods, okay, related to present value of money and related to future value of money, right? So second unit also completed. Next, let's go into third unit, right? Third unit also one question will be related to theory question and another question is related to problem, right? So listen carefully, my theory questions, important questions, most important. So these questions will be frequently given in previous exams. So explain various sources of long-term finance. Explain various sources of long-term finance. So here funds are sources of funds divided in three types: long-term funds, medium-term funds and short-term funds. So long-term funds uses by any business organization in acquisition of assets like that plant and machinery, land and building, premises, machinery like that. So these long-term sources arise by issuing the equity shares and issuing the preference shares and issuing the debentures, right, and return earnings. So right like this. So this is most important. Okay, compulsory given in the exam. Explain various sources of long-term finance. And also second question is discuss the features and advantages of equity shares and preference shares. Then third question is define capital structure. What are the factors determining an ideal capital structure? Right? Next, fourth question is explain the concepts and computation of cost of capital. So read these four questions. Right? Next, let's going to fourth unit. Right? Fourth unit, chapter working capital management. So first question is long questions, long answer questions. First question is define working capital. Explain the differences between gross and net working capital. Second question is discuss the factors determining the working capital and requirement of the firm. Third question, explain the importance and objectives of the working capital management. Fourth question is describe methods of preparing cash budgets. So in this unit also, one question will be theory and another question will be problem. Right? To prepare well related to cash budgets, most important, how to prepare cash budget. So practice this. Next, let's go into fifth unit. Fifth unit, receivables management. So first important question, explain the concepts and objectives of the receivable management. Second question, discuss the factors influencing credit policy and components. Third question, explain debtors outstanding and analysis in the receivable management. Fourth question, describe inventory management techniques, ABC analysis, EOQ, reordering level, and safety stock. Those are all important questions. Okay, read carefully. If you have any doubts, any difficulties, okay, contact us. New Page Degree College, Champapet, opposite Government Primary School, Gandhi Road. Okay, thank you.